Today we are going to talk about JD.com and why this is a great opportunity today in the market after the run of Alibaba and Baidu. I'm Eddie for Mine, and in this video we are going to deep dive into JD.com stock, and we're going to see why this stock is actually so undervalued and if it's going to be a great opportunity for your portfolio, especially with the rise of Chinese stocks recently. So let's get started. There has been a lot of talk about Alibaba very recently because a lot of people have realized that Alibaba is one of the best AI play actually in China today. But I think a lot of people also forgot about JD.com and the incredible actual opportunity that lies within JD.com, especially at the current valuation. So today we are going to first deep dive into the business of JD.com to review their latest earning, to see what's my thesis about JD.com, especially with the valuation, and to give you all the elements to actually judge by yourself, is it a buy or not for your portfolio. Okay, so let's start maybe with my core thesis, and then we are going to deep dive into the different elements afterwards. So why I think that JD.com is a great opportunity for your portfolio and for my portfolio as well. It's not financial advice, do your own due diligence, but definitely from my side and in my opinion, I really think that JD.com today is very undervalued and that the market does not really appreciate the fact that JD.com is still continuing to grow, and they have been able to have a very clever management in terms of e-commerce. So basically my thesis is that first, JD.com is very cheap. We are going to look at the valuation afterwards, but we are looking at figures like 0.25 price to sales. We are looking at 5 times price to operating cash flow. So this is actually dirt cheap for a stock. Also, JD.com is going to benefit definitely from the growth of Chinese economy and the stimulus that the government is going to put back into the economy going forward. We have already seen that played out. Investors, they have not yet recognized that in JD.com, even though they have bid up basically Alibaba and Baidu. But what we are seeing is that JD.com has been a laggard. And this is the third pillar of my thesis, is that a lot of investors, especially in the US, they're going to rotate from Alibaba and from other Chinese names into JD.com when they realize that, oh, JD.com is actually also good business, a very good business that is growing, and this is going to actually spit a lot of free cash flow. And finally, we have seen that JD.com management also is returning money to shareholders. So we have more than 3% in terms of dividend, and they are also buying back shares. So I think that the yield to shareholders today is above 5%, which is also very good, especially for a stock growing 22%. And given the valuation today, I think that all these factors makes it a very compelling proposition for the stock. So we are going to deep dive into all the different aspects of JD.com, but this is the core of the thesis, basically a cheap stock which is growing on the back of strong tailwind in China and in terms of commerce, and basically that is also giving back to shareholders. So what's the business of JD.com? JD.com is one of the biggest online retailer in China with Alibaba, and with more than 600 million customers online and more than 1 trillion yuan of revenue every year. So basically JD.com is actually a powerhouse in terms of e-commerce in China, and a lot of people I think have forgotten about this, but this is actually a true leader in terms of e-commerce, and especially in high value e-commerce alongside Alibaba, and they're going to benefit tremendously in the coming years of this rise in terms of consumption back into China. But JD.com is also known for its incredible execution in terms of logistics. So they have actually IPO'd JD Logistics, and this is one of their crown jewel. One of the great competitive advantage of JD.com, it's its logistics arm, and they have been able to execute very perfectly, and they have been able to grow this business, and they have been able to support their online retailing business thanks to this logistics arm. Also, very recently, we have seen JD.com get into this delivery race alongside Meituan and Alibaba, and definitely they have been able to actually strike into this industry. They have been able to take around 10 or 15% shares into this business, and I think that they're going to stop at that. But definitely today, one of the core focus of JD.com is providing e-commerce and logistics in China and focusing especially on value. And this is where JD.com is a bit different from Alibaba and Pinduoduo is that they really focus on value and high value items. So if we look at it, like Pinduoduo is actually focusing on lower price tiers, Alibaba is focusing on scale, on masses, and JD.com is focusing on high value item, especially like electronics, for example. So I think that this is how the landscape of online e-commerce in China is actually built. If the consumption in China and the confidence in terms of economy is coming back in China, so JD.com is going to benefit tremendously from the stimulus and the comeback of consumption in China. So let's review very quickly their latest earnings, so Q2 2025 that they've released on August 14th. And basically, so what they have announced is that they have been growing revenue by 22%, which is actually extremely good, especially in the current environment in China. Obviously, this has been actually supported by all the stimulus and the support from the Chinese government, but definitely we can see that JD.com has a lot of momentum behind its current e-commerce platform, especially coming from the growth in terms of electronics appliances. We are seeing a lot of people like renewing their appliances thanks to the incentives from the government. So definitely strong revenue growth from JD.com, and we can expect this to continue going forward, especially with the comeback in terms of confidence in e-commerce and in terms of consumption. And now let's look at the breakdown between their core businesses. So first, in terms of JD Retail, so this business grew by plus 21%, which is actually very good, and this is what we just explained, thanks to the incentives and the support to the economy from the Chinese government and a lot of consumption coming. Then we have also the growth of JD Logistics plus 17%. This is one of the crown jewels of JD.com, and this is one of their core strengths and their core moat, their logistics in China. So also very good. And finally, the new businesses growing triple digit actually this quarter. And this also on the back of the fact that they have entered the delivery business. And this is going to be quite synergetic with their e-commerce, very similar to what Alibaba, because today the trend in e-commerce in China is basically instant commerce. And that was a very great move from the management of JD.com to actually get into this business, to put a lot of investment and to try to take some market share, basically to defend their own basically turf in terms of e-commerce, because we all know that the whole business is going to go to instant commerce. So I think with the logistics, they can definitely get a lot of market share. They can actually get a lot of value from this delivery business. I think one of the core differentiator from JD.com compared to Meituan, for example, is that they are focusing on high value items, but also high value restaurants. They are focusing on quality, and this is a big differentiator for JD.com. And I think they are right to actually keep this line of business, and I think that they are still going to be able to continue to grow in terms of volume and in terms of value thanks to these core principles. So definitely like very good Q2 2025 earnings. The market did not respond like very greatly to these earnings, but definitely we can see that JD.com is going into the right direction. They have a lot of growth, but the concern today is based on profitability and the fact that they've entered this instant commerce race and that they are going to put a lot of investments behind. But this is going to calm down, and JD is not going to spend all their money forever on this industry, and we are going to see that with the revenue growth that going forward, the profitability is going to come back, and JD.com is going to continue to grow and continue to be one of the key leaders in terms of e-commerce and commerce altogether in China. Now let's have a look at JD.com's valuation. So as we've said before, and if we look at the figures, JD.com is actually very cheap. And let's not forget that they have been investing. So basically today, the profitability of the business is depressed. But even with that, look at the figures. So EV to sales at around 0.2, incredible. And if we look at the PE ratio, so around 12, and if we look at the price to operating cash flow around 5, which is actually dirt cheap, price to free cash flow is also very low, so like in the teens. And so basically what we are seeing with these figures in the next 12 months, so all this forward valuation, is that JD.com is actually very cheap. And I cannot like repeat it again, like it seems that the market just left it for dead. Well, we should not forget that JD.com is actually an online retailer, so that's why like the valuation is not as high as companies like Alibaba or even like US Tech, for example. So let's not forget that. But still, for an online retailer, like the valuation is very low. And I think that when the market is going to wake up to this fact, well, they're going to see that even if we re-rate in terms of valuation JD.com, like it's still going to be very cheap. So JD.com could definitely double in the next 1 or 2 years and still be very cheap yet. So I think that's one part of investment thesis of JD.com, is that the valuation today is still very, very low, given the fact that they are continuing to grow. They are going to continue to grow sales. They're going to continue to grow operating cash flow. And what you're going to see is that the valuation is going to come down and down and down. And so which means that J.com, if the stock price doesn't move, is going to still be cheaper. And what we're going to see is also the management is going to come and buy back a lot of shares. And that's what they have been doing recently. And I think that's what they're going to continue to do. And so definitely J.com is actually in a very good position. And we are going to see right now, like, why a lot of people, especially on X, are also seeing the same type of stuff, but on a very different axis, meaning technical analysis. So actually, very surprisingly, we have seen on X a lot of posts highlighting the fact that there is a very bullish pattern in terms of technical analysis for J.com. I'm not a specialist, I'm not an expert in terms of technical analysis, so take that with a grain of salt. But just to mention that a lot of people are looking at the chart of J.com and they are expecting J.com to actually catch up with other names or the Chinese name like Alibaba or Baidu, for example. This is a good setup for J.com because it is very cheap, not a lot of expectation, good technicals, and so actually everything is lining up for basically J.com to actually go higher in the coming months. So if they execute well, if they keep being reasonable with their instant delivery war with Meituan and Alibaba, if they continue to actually benefit from the support, from the incentive of the government, I think that J.com has all the tools to actually grow much higher in terms of stock price and in terms of business. So that's basically the takeaway of all of this, basically seeing that J.com is today a great opportunity in the market because it has a lot of things aligning pretty well actually on the short and mid-term for the stock. So we have seen a lot of optimism coming back into Chinese names. We have seen that J.com is also very cheap, so a lot of re-rating and a lot of margin of safety actually on this business. We are seeing that J.com is going to benefit as well from the coming back of consumption in the Chinese economy, and we have seen as well that they have a great setup in terms of technical, so in terms of charts. So just take that into account, a review of the opportunity. As we said before, this is not financial advice, do your own due diligence, but I think that this is basically the takeaway of J.com. So on my side, I think this is a buy. I think it's going to be in my portfolio, definitely. This is your own judgment for your own portfolio. I think that there are other opportunities in the market. Chinese stocks is not for everyone, I think. But well, so if you're interested in analysis like this one, so we have other stocks on this channel that we have analyzed, like PayPal, for example. So please check my other videos. Tell me also what you think about J.com. Maybe you don't agree with me. So put that into the comments. Please subscribe, and I'll see you in another one. Bye.